quite volatile. But one thing that stands out is that today's also been a stock-specific day. We've seen the mid-cap index outperform about 0.5%, and there are two advancing stocks for every declining stock. So it's a market which is still rewarding individual stocks. Mahantesh Sabarad now joins in for some stock ideas then, Deputy VP Research at SBICap Securities. Mahantesh, hi, good morning. Good to have you in our studios. Nestle, a stock that we haven't discussed for a while now. You're bullish on that despite the whole Maggi fiasco?
So Maggi fiasco is only a part of what Nestle offers overall in the country, and actually what we are looking at is that sooner than later they will be able to come out of this Maggi row because a lot of development has happened over the period of months in terms of challenging the order. The new CEO has come in. The new CEO is talking a lot of things about focusing and being flexible in their product portfolio. So that's something which we find is encouraging. If you look at from the company's own fundamentals ahead, then the whole commodity price correction that is happening is something that also helps them. Their raw material cost largely is milk, and we have seen that milk prices are also going down. So effectively there is a scope for margin expansion ahead, and then because of the stock correction the valuations are appearing attractive, something like 37, 38 multiples of C17.
Okay, so you have a target price of what on Nestle?
So we
by when?
Currently we have a 7,300 rupees target price on Nestle, and that's like talking about a year from now.
Okay, just one quick follow-up on Nestle. Would the raising of import duty on ghee and butter that was announced yesterday to 40% impact raw material costs for them at all?
No, not really, because the overall market is not serviced much by the imports, so
okay,
wouldn't be concerned with that.
Okay, that's on Nestle. But in the mid-cap real estate space, we have seen some good gains. Godrej Properties clearly stands out, but you're picking Oberoi Real Estate. Why is that?
Among the very few companies which has net debt to equity ratio which is very low, it's just about 0.1 times. In fact, they were debt free until a year back or so. So this is one quality company which works without debt. Our calculation suggests that they are trading at roughly some 27%, 26% discount to its NAV. That's the valuation multiple metrics that you use for real estate companies. So it's trading at a discount, and all its recent new launches have been showing good amount of cash flows. The Mulund launch, for example, has been pretty strong, and we expect the Borivali launch also will be good enough. So from that perspective, they are drawing in a lot of cash with leaner balance sheet. That's a good stock to own.
Okay, well, you can see some visuals coming in of the meet which is taking place in Bangalore with Prime Minister Modi as well as Chancellor Angela Merkel. So we'll keep getting you updates on that. The first stop was the Bosch plant. So those are some live images which are coming in terms of the ongoing visit for the city. We'll keep getting you updates, incremental movements coming in at this point. But Mahantesh, that's on Oberoi Realty. I was looking at your picks within the pharma space. You like Cipla. Why is that, and what's your target price on that one?
So the target price is actually a very small upside from the current market price, if you'll notice. But what we are excited about is post this InvaGen acquisition, you will see 2 years from now a good CAGR in their earnings, and we will see more launches, especially the Seretide MDI inhaler in UK, for example. So some of these things are going good for Cipla, and from a valuation perspective, it is just about 25 multiples on FY17, and any further rise in its business or any better sales momentum ahead would mean that we will be upgrading our call soon.
Okay, Heidelberg Cement is the other stock that you like.
So Heidelberg is a central India play on cement company. So when you look at the cement sector, for example, you would typically be very wary of the south-based companies because of the huge capacity underutilization that exists out there, although the prices are very robust. Likewise, on the north, the situation is kind of a little reversed. You have a lesser amount of capacity, but the prices were not moving. So there are regional plays in cement basically. So central India is unaffected by either of these, and we find that both central and east India are the lucrative markets to look forward to as far as cement is concerned. So Heidelberg is well poised for that, and I think it's on a valuation multiple on an EV EBITDA basis just about 9.2 times, so which is fairly attractive for that kind of company. On a replacement basis, of course, it is trading at a discount to the replacement value of by about 25%. So.
Okay, well, if I look at it, Heidelberg is very close to your target price of 83 rupees. So
Correct.
would you be revising that on the upside?
Yeah. So these are some of these stocks are Heidelberg is kind of a perennial favorite for us because we see that the ongoing momentum in the region is very strong, and there's virtually no other player to be picked in that in that region. So Heidelberg remains one of our favorite. It has had a decent stock rally of late, and we think we can look for an upgrade ahead.
Okay. All right, that's on Heidelberg, and you have one last pick. This is now back to the Nifty space. It's Axis Bank. Why do you like it? And if you have a view in terms of what they might release this quarter as well.
So let me not talk about the quarterly numbers as of now, but Axis Bank is a very strong private sector bank. Has a good CASA, has all the ingredients that a good bank really needs: sufficient capital adequacy, lower NPA norm, lower NPAs, higher CASA, and this is an environment where we are poised as a country to pick up. Credit growth has been just about in single digits, 9%, 10% kind of credit growth, and these are companies these are banks, Axis is one of them, which are growing faster than the credit growth, and as the pickup happens there will be more to come. So we are looking at definitely a better earnings trajectory ahead.
All right. Any disclosures, Mahantesh?
So all these stocks that we talked about, none of them are owned by me nor by my firm, and we keep advising various clients on these companies from time to time.
Okay. All right. Fair enough, Mahantesh. We leave it on that note. Thanks very much for joining in and talking to us. Well, those are some picks coming in for the market.